Let me ask you something. When you stare at a chart, what do you really see? Do you just see random candles flickering up and down, like a heartbeat monitor you can't quite decode? Do you see neat little patterns, triangles, flags, head and shoulders, hoping the market will respect them this time? Or maybe you see chaos, noise, a constant storm of green and red that feels impossible to tame. But let me ask you this. What if I told you none of that is the real market? Because here's the truth that most traders never learn. The market is not the price. Price is just the surface, like ripples on a river. You see the splash, the wave, the disturbance, but you don't see the current that creates it. And just like a river, beneath every move in the market, there's a hidden force flowing silently, invisibly, powerfully. It's the flow of liquidity, the push and pull of orders, the fear and greed of every trader placing a bet. Most traders get trapped at the surface. They chase candles, draw lines, and convince themselves they understand the game. But until you see beneath that surface, you're just reacting to shadows. Because the real game, the one professionals play, is happening underneath, where liquidity, order flow, and trader psychology collide to shape every candle you see. And today, I'm going to take you beneath that surface. I'm going to show you the river beneath the price. And once you see it, you'll never be able to trade the same way again. Part 1. The surface illusion. Think of the price on your screen as waves in the ocean. From the surface, the waves look powerful, crashing, moving, unpredictable. Some rise sharply, others collapse instantly. To the untrained eye, it feels chaotic, random, and even dangerous. But here's the thing, the waves are not random. Every movement you see on the surface is being driven by invisible currents beneath. Strong, deep, steady flows that you can't see unless you know where to look. And if you only focus on the waves, on the surface, you'll always feel lost, tossed around, reacting to every splash. But if you understand the current, suddenly the chaos makes sense. You stop panicking with every rise and fall, and instead, you begin to flow with it. That's exactly how most traders lose. They chase the wave. They see price breaking out and think, this is it, it's going to the moon. Or they see a trend and believe it will continue forever. But here's the painful truth. Most of those moves are illusions. They're surface-level traps designed to pull you in, while beneath the surface, the river is flowing the other way. Let me show you an example. At this point, every retail trader thinks, this breakout is real, I don't want to miss it. They rush in, buying at the top. But watch what happens next. The price suddenly stalls, then reverses sharply. What looked like a powerful wave upward was nothing more than a trap. What actually happened? Big players used that breakout to trigger retail orders. While everyone was buying, they were quietly filling their sell positions. Retail traders were lured into the wave, while professionals were moving with the current beneath. This is why it feels like the market is against you. It's not personal, it's just the nature of the river. And until you learn to read beneath the surface, you'll always be reacting to the splash, not the flow. Part 2, what is the river? So what is this river we keep talking about? It's not just price. It's the hidden flow of money, orders, and psychology beneath the candles. The forces that actually move the market while most traders only see the surface. And 3 main currents shape that flow. 1. Liquidity, the fuel for price movement. Think of liquidity as the oxygen price needs to breathe. Without oxygen, fire dies. Without liquidity, prices cannot move. Now here's the catch. Big players, banks, institutions, funds, they don't trade like you and me. They can't just click buy or sell with huge positions. If they did, they'd push the market against themselves. So what do? They hunt liquidity. They go where your stop loss sits. They go where clusters of orders pile up. They create the illusion of a move, not to trade with you, but to trade against you. Where's that liquidity hiding? Right above obvious highs, where breakout traders place there by stops. Right below swing lows, where fearful traders tuck their stop losses. Around clean support and resistance levels that everyone on social media is watching. Liquidity is the riverbed. It shapes the flow, and unless you see where the oxygen is, you'll always wonder why the price turns where it does. 2. Order flow, the pressure beneath the candle. Order flow is the raw force of buying and selling. But here's the trick. By the time you see the candle on your screen, the flow has already happened. Think about that. You're reacting to history. The professionals? They're anticipating the future. When price surges, it feels like you need to jump in. But that green candle is not an invitation. It's evidence of orders that have already been filled. That flow is often exhausted the moment you react. The true skill is reading the intent behind the flow. Was that surge real demand, or just a liquidity grab? Did that sell-off represent panic selling, or was it institutions quietly buying at a discount? Candle by candle, you're seeing footprints of the flow. But if you chase the footprints, you're too late. The river has already passed. 3. Trader psychology, fear, greed, and hope. And finally, the most underestimated current, psychology. Because the market isn't just numbers, it's people. Every trapped trader is future liquidity. A buyer forced to sell, a seller forced to buy. Think of it this way. When traders chase a breakout at the top, their greed makes them buyers. When price reverses, their fear forces them to sell, adding fuel to the downside. When traders panic sell at the bottom, their fear makes them sellers. When a market snaps back, their hope turns into desperate buying, feeding the reversal. The river is shaped as much by emotion as by numbers. Fear creates waves. Greed creates spikes. Hope keeps traders holding long after they should have cut their losses. And the professionals? They don't fight emotion, they use it. They profit from the forced decisions of retail traders who can't control themselves. Part 3. How the river traps you. Here's the painful truth. The market is not built to reward the majority. It's designed to mislead the masses, so the minority, the professionals, can profit. And how do they do it? Through traps. Breakouts suck in eager buyers. You see price finally punching above resistance, green candles flying, and your heart says, this is it, the big move. Don't miss out. You buy, but seconds later, the breakout stalls, reverses, and crashes back down. You're left holding the bag, wondering what just happened. Sudden dumps trigger panic sellers. You see a big red candle slicing through support. Fear floods in. You sell instantly, desperate to protect yourself. But just when you're out, price whips back up, leaving you behind as it rips higher without you. Fake moves exhaust the impatient. The market drifts slowly, aimlessly, wearing you down. Just when you can't take it anymore, you exit in frustration. And almost immediately, the real move begins without you on board. And while all this chaos is happening on the surface, beneath it, the river flows calmly, collecting liquidity, filling orders, feeding on emotion. If you've ever said, it feels like the market is hunting my stop loss, you're not crazy, you're right. That's the river at work. Because here's the uncomfortable reality. Your stop is their entry. Big players can't execute massive positions in thin air. They need willing buyers when they want to sell. They need desperate sellers when they want to buy. Your stops, sitting neatly above highs, tucked just below lows, become their fuel. Every time you get trapped, every time you get shaken out, every time you sell in fear or buy in greed, you're providing liquidity for the current. Without retail traders handing over their orders, the river can't move. And that's why it feels like the market has a personal vendetta against you. But it doesn't. It just knows exactly where you're standing in the water. Part 4. How to see the river beneath price. So how do you actually see the unseen? It doesn't start with an indicator. It doesn't start with some magic tool. It starts with changing the questions you ask. Most traders ask, "Where's the price going?" That's surface-level thinking. That's chasing the waves. Professionals ask a different question. Where is the liquidity hiding? Because they know if they can see where liquidity sits, they can see where the river will flow next. Here are 3 ways to start training your eyes to see it. 1. Liquidity pools, the market's honey traps. Think of liquidity pools like honey for bees. The market knows exactly where it is, and it can't resist going there. Where do these pools form? Right above obvious swing highs, right below clean swing lows, around textbook support and resistance levels, because that's where retail traders put their stop losses and pending orders. Example, price creeps toward a previous high. Everyone thinks, if it breaks, I'll buy. Others tuck their stops just above it. When price finally pushes through, it triggers all those orders, only to reverse instantly. That quick tap wasn't a breakout. It was a liquidity grab. The lesson? Don't just look at levels as support and resistance. See them as liquidity magnets, targets for the river to sweep before the real move begins. 2. Failed moves, footprints of the unseen. One of the clearest signals of the river at work is the failed move. This is when price pretends to move strongly in one direction, only to collapse in the opposite direction moments later. Why does this happen? Because the market needed to trap traders first. A false breakout above resistance sucks in eager buyers. A fake breakdown below support shakes out fearful sellers. Then, once retail is trapped, the professionals flip the market and ride the river the other way. Example, imagine a breakout candle that looks powerful. Volume spikes. Social media screams, it's breaking out. But seconds later, the price reverses hard. That failed move wasn't a mistake. It was a signal. It shows you where liquidity was collected and where the river is really heading. Failed moves are like footprints in wet sand. They reveal where the big players walked. 3. Volume and speed, the rhythm of the river. Finally, watch not just what price does, but how it does it. A slow, grinding move upward often shows weak buying pressure, like the river is forcing itself upstream. Then, if that slow grind is followed by a sudden, sharp reversal, it often reveals hidden distribution. The pros were quietly selling into that grind, and when they were done, the dam broke. On the flip side, a fast, aggressive dump may look terrifying, but if volume is absorbed quickly and price snaps back, that's often hidden accumulation. Big players were buying everything retail was dumping in fear. The lesson here is simple. The speed and rhythm of price action tells you about the strength of the current beneath. The surface is just the story, but the current? That's the truth. Part 5, the mindset shift. But seeing the river is not just about charts, it's about mindset. Because let's be honest, most traders don't lose because of bad strategies. They lose because of bad psychology. If you're chasing every candle, you're swimming against the current. You're reacting, panicking, exhausting yourself, while the river quietly pulls you downstream. If you're greedy after wins, fearful after losses, or impatient for action, you're not trading the market. You're being traded by it. Think about that. When you're impulsive, you're not making decisions. The river is making them for you. Your emotions are the leash, and the market is tugging it. True trading mastery means stepping back. It means detaching from surface noise, slowing down, and learning to observe instead of react. It's not about predicting the future. No one can do that. It's about reading the flow in real time, aligning with it, and waiting until the river makes its intentions clear. Like a fisherman on the riverbank, you don't chase every splash in the water. You don't jump in, thrashing around, desperate to catch something. You wait, patiently, calmly, because you know the river will eventually deliver what you're looking for. And here's the paradox. The less you chase, the more the opportunities seem to come to you. The more you slow down, the faster you see. The more you detach from the outcome of a single trade, the more consistent you become over time. Trading is not a battle against the market. It's a battle against yourself. The market doesn't care about your feelings, your hopes, or your fears, but the river beneath the price will always expose them. The question is, will you fight the current, or will you learn to flow with it? Part 6, Practical Application. Here's something you could do right now. Pull up your chart. Mark the last 2 obvious swing highs and swing lows. Now, instead of asking, will price go up or down? Ask, whose stops are sitting here? Who will be trapped if the price moves slightly beyond this level? Where does the river need to go to collect that liquidity? When you think this way, you stop reacting to candles and you start anticipating the flow. So the next time you look at a chart, remember, you're not just watching price. You're watching the shadow of something deeper. The river of liquidity and psychology that carries every candle you see. Most traders drown because they only chase the waves. But if you learn to read the river, you'll trade with patience, clarity, and confidence. If this opened your eyes, even just a little, hit that like button so more traders can discover this. Subscribe if you want more deep dives into trading psychology and strategy, because this channel is about trading transformation, not just tips. And tell me in the comments, do you feel like you've been chasing candles, or are you ready to start reading the river? Remember, the candles lie. The river never does. See the unseen. Trade the flow. I'll see you in the next one. Outro screen. The river beneath the price with calm background music fading out.